Some encouraging trends in the economy will have a positive impact on businesses in the Garden State. That's according to Luke Tilley, the chief economist for the Federal Reserve Bank of Philadelphia, who was one of the speakers at the Rutgers Quarterly Business Outlook here in Cherry Hill this morning.
The acceleration in the second half of last year was certainly good, and the decline in the unemployment rate very good as well. For New Jersey, we've seen a sharp decline in the unemployment rate over the past year. It's down to 7.3%. It was 2.2 points higher a year ago, so that's a December to December number through December 2013. And I think that that's really encouraging for New Jersey. We've seen some stronger job growth over the past year, and we're actually in education and health services, which is a sector that is more health than it is education, but we've seen a lot of jobs added there, which is contributing to that.
Tilley says the healthcare industry remains a question mark for the state's economy, particularly as small businesses learn how to cope with the changes coming about through the Affordable Care Act.
The biggest impact of healthcare is still uncertainty of how it's going to roll out and how firms are going to be reacting to that. I think firms, especially those around the 50 threshold mark, are still trying to figure that out.
And Tilley says the encouraging areas of the economy are in education and healthcare.
Well, certainly education and health is strong, and it was throughout the recession. That actually added jobs through the recession. A little bit more cyclical, the leisure and hospitality sector. So as consumers have been spending more, we've seen jobs added in restaurants and amusement, entertainment, lodging like the building that we're standing in right now. All of those leisure and hospitality places have been adding jobs. It was about 7,500 from December 2012 to December 2013 for the state.
Tilley says it's unlikely that the Fed will have any extreme changes with the arrival of a new Federal Reserve Chairman, Dr. Janet Yellen.
I don't think that it's necessarily going to change that much. Of course, Dr. Yellen is a different person from Chairman Bernanke, but I think that there is the advantage of having continuity. Of course, she's been the vice chairman of the Board of Governors for a long time now. She was there for the creation of these programs. She was there for the creation of the new communication tools that the Fed uses. And also before she was on the Board of Governors, she was the president of the San Francisco Fed. So she has a perspective from the reserve banks as well. So I think that what we're going to see is some continuity from one chairman to the next.
This is Steve Lubetkin, GardenStateBroadcastNews.com in Cherry Hill, New Jersey.